warm welcome to one of our initiatives by Green Hedge Capital. And this time I am interacting with one of the youngest fund manager, Rohan Mehta. He's a CEO, fund manager at Turtle Wealth, and he's the author of 212 Degree, the Complete Trader book. So welcome, Rohan.
Thank you, Rasmeet, and love to be here.
I think this is the first time you in Amritsar.
Yeah, of course, and first time, but not the last time because I've loved the vibe of the city. It is to a different level.
So today we're gonna talk a lot about wealth creation. Obviously, everybody wants to talk about the Russia, Ukraine, and one of the very I can tell you about Rohan. He always thinks about X times, not in a percentage times. So before we going into this wealth creation and the stock selection, I just want to know more about you, right? So one of the curious things everybody wants to know, like a Turtle Wealth, your name, how you decided this name. I know this about the Richard Dennis and about this Turtle Wealth creation process. Then how you relate your thought process about this Turtle and your company name?
Actually, we wanted to keep a name called Wealth Mantra, but Wealth Mantra was been taken by somebody else, and we didn't wanted to fight in something else. So then we were very much impressed with this Richard Dennis group, Turtle group, who had created amazing wealth by a process-driven approach for long and short. And eventually we thought that let us keep this name. And very few people know that turtle and tortoise are different. Turtle is fast and reliable, and tortoise is slow and steady. So people say that tortoise and turtle are same. No, they are not same. They are very different. And we relate turtle very well with wealth. The only reason is that turtle is very strong from the principal point of view on the head of it. Very soft from the downside. So our exits are very soft. If something goes wrong, we will exit out. And the best thing I love about turtle is that if nothing comes into the picture, it will put the head in. Honestly, from last 10 years, I have not read newspapers. I have not watched any news channels, not being in any WhatsApp group of stocks, but still my wealth creation has not been affected. So don't want to be in the world of chaos, want to be very sane. And the most important part is that turtle is about longevity. It's about more than 100 years, 150 years. So what if we can create something, an ecosystem of turtle? So that is the reason the turtle was. And of course, if you go back to the spiritual part of turtle, turtle is for wealth creation. So you know that, in Feng Shui and all, they give turtle as a gift for wealth creation. So everything was connecting on the right juncture, and the main thing was that naam mil raha tha. So we got it, and then eventually it was history then.
So it's always there, making a sense from a noise, right?
Yeah, of course.
It's you're not in the part of many groups, right? Over noise and over information doesn't help. So that is a very thing. But don't you get like sometimes you are not tempted to get into those talks or something unless it's not proven by your process? So you're not into very fast. It doesn't hurt you or something. Yeah, it's a process.
Yeah, it does. So I always tell people that it's all about regret management. What you do at investing. What you eventually understand is that I'll give you an example very simply. Like for example, I am a vegetarian. From that, I am Jain in eating. Somebody making the best chicken in Amritsar. Amritsar is known for its food, right? I don't have any regret because I don't eat that, right? It could be the best of the best chicken in the world. Same way, I think so in investing, if you can create that process of yours, that okay, fine, if the vertical is 1, 2, 3, 4, 5, 6, 7, then only I will invest into that stock. What eventually happens is that your regret goes out of the market. Like I'll give you an example. We have this triple P approach where we have price, profits and people, right? Now there is a stock called TTML. From like 50 rupees it went, or 10 rupees it went to 200 rupees. For a normal person, it could be a huge regret that I have not bought that stock. For me, it can never be, because I will never buy a company which does losses. So if you can craft that process, eventually you can understand that, okay, fine, I am not interested in the stocks which are out of my control. But what I am interested is that the stocks which are in my control, how much I am making out of it. So that, of course, that comes without a lot of experience and sanity in the world. But I have understood one thing, that you can't control everything, You can only control the things which you can control.
So obviously, I have gone through as a trader, investor, as a distribution. There are multiple fields in this line. So why you chosen like PEMS? I mean, the most difficult thing in my life, if I can understand, I can take my risk, I can lose a lot, I can gain a lot, but managing client money is the most difficult part of any in our field. I mean, I always think, yeah, why should I go? I don't have the appetite. I have already surrendered this because I can be a trader myself. I can manage my risk. I can distribute. I can advise the thing, right? But as a part, well, why you chosen keep PMSs for you?
Yeah, so it was not decided. It was not a plan. It was just a journey. I started with my career selling mutual funds way back in 2004-5. My mother's side, my dad's side, nobody was in stock market, and it was not a celebrated profession. My dad told, if you want to go to stock markets, I'm not going to give you a single money from my side. So it was tough decision, but eventually I have done everything. So very few people, these days when I see kids from CFAs and IIMs, they want to just go back to the computer and just want to say economy is good and this stock is good. But the real thing comes when you interact with people, interact with clients. So I have done my selling, I have done my distribution, I've worked with MNCs, I've been into the research side, and then I've been a trader. So eventually I understood one thing, and that is that wealth is created on a long-term scale. Wealth is not created on a short-term scale. And the question what you asked about managing client, I didn't have this answer till 2018. Till 2018, I was searching this question answered from everywhere. I'll share an anecdote. So I went to Singapore and I messaged the great Samir Arora that I wanted to meet you. And Samir Arora was so kind enough, he told that come to my office. And one question I asked Samir Arora was, why do you manage clients' money?
Yeah.
You are rich. You don't have to manage clients' money. Why you want to manage clients' money? And one answer he told me was amazing. That Rohan, the respect, the kick, and the understanding of business you get only when you manage people's money. So this was one germ which he kept in my mind. And second was my mentor. He told that if you're only doing for your own self, you're not going to create value in people's life. And the great people create value in people's life. Then I thought that why not I do something which is eventually being successful for a longer period of time. People want to create long-term wealth. And if I can keep my rules and tell the clients that, okay, fine, this is my rules. Are you inclined? Give me money. You're not inclined, don't give me money. I'll not cut off on my rules, but I'll just focus on creating business. And the reason we got PMS is because we wanted either not to do business or either we wanted to be the leader in the business. And we understand that in our ecosystem of Indian financial markets, if you don't have license, you can't create a huge business. So eventually we never thought we will get an PMS license. But then when SEBI came down to us, we understood that sometimes we undervalue ourselves, and we understood that how better our research was. So yeah, that was the journey, and right now we are into the top 20 PMS companies in India.
Wow, that's amazing. I mean, I always have this question because as an investor, you're answerable to yourself.
Yes.
As a distribution, you're helping the community. But client managing a money is the most difficult thing, because it's a responsibility. But the way you are confident and does it give you sleepless nights?
No, never. My sleep has risen from 6 hours to 9 hours.
Really?
Yeah.
I mean, if you're managing a client money and you're saying you are not sleepless.
No, I'm never sleepless. So if I'm sleepless, that means either my client selection is wrong,
right,
or either my stock selection is wrong. If your client selection is right, then why you need to get a sleepless night? I'll tell you. When you are not managing clients' money, what happens is that your accountability is never for anyone in our business. Right. What happens is that when you are managing clients' money, what happens? Client will ask you 5 questions, and that is the reason you will be set on your process. I can't outweigh my process if I am managing clients' money because they are accountable person. In other business, there are 50 people whom you have to ask to, or 50 people who are different people. In our business, our own competition is with ourselves only. But when you have client, like for example, if I buy a stock which is Vodafone, my client tomorrow will call me and thrash me around. Then why you bought this stock? Because they know the process. Now I can't get lure on, okay fine, I got this information or I got this thing, let me buy it. So my journey has been refined. I believe managing clients' money makes me a better investor by own self.
Basically, you are aligning yourself with your investment along with the client's money. It's exactly the same. What you're doing yourself,
yes,
you are doing for the clients. That's a wonderful. I go now a little bit back because for me, 2008 was one of the turning points because around 2005 to 2007 everybody was making money. You know, I entered that field into that line because I was not into this field. I thought I have got the skills as a trader. I know the thing. Everybody become a guru. Just like these days now, people have a 2 year of experience and become a guru or something, right? But 2008, I still remember that 2008 to 2010 was a turning point where I said, really, I got that money with skills or without. Then I ordered a lot of books, you know. That was I still remember I ordered 30 books from a Flipkart. And that time was actually learning. That was a, fresh start, like 2005 to 2010. So around 2008, because everybody learned a lot in 2008. So you must be in market. So what was the lesson or what was the thing you remember about 2008?
2008 was one of the most toughest but the biggest turning point of my life. 2008, the biggest lesson, I'll just be focused to your question, was because I started similarly the same time when you did, 2005, and we at the time we never saw the worst times. So again that frenzy journey of you starting and things going out, you find you are the top of the world, you are intelligent, but actually you're not intelligent. Market is more intelligent than you. 2008, I understood one thing, that stocks can go to zero. And this is biggest learning I have learned ever in my life, that you can, in good times, stocks, if they are doing good, they will take care of itself. Losses never do. And second biggest learning is that you should never outsee the stocks which are doing good in bad times. So of course there are stocks which are doing bad in bad times, but there will be stocks which are doing good in bad times. 2008, if you see, the whole FMCG cycle started turning out. So you see, HUL was making an all-time high, Nestle was making an all-time high. At that time, for a new fresher, you tell to buy an HUL, he will say, are you stupid enough? You should buy a DLF, Reliance Capital, Reliance Infrastructure, or maybe SBI, because that were the frenzy over at that time. But after you see from 2008 to 2020, this all stocks did 10x from their own price, which were brilliant businesses, right? But then people were not seeing the stocks which were outbounding the time, but they were only seeing the stocks which were going down and to buy it. So today also when I come to on TV and they ask us that what are the sectors you are looking forward for, I always say to them that in bad times, don't see the sectors which are cracking down. See the sectors which are doing very good at that time. The stocks which are doing right now very good has the probability to do much more better in coming time, rather than the vice versa thing. So I think so 2008, and third understanding was that you can create wealth for 3 years, you can do superior. One fine day can come and can destroy wealth in a week. So we say this anecdote is Rome was not built in a day, but can be destroyed in a day. So don't get over leveraged, have your own sanity, and eventually market is more smarter than any of us in the world.
Great. I think the first thing, I still remember the infrastructure stories and everything. That was, everybody was having this Reliance and big stories. Big stories. So even the all calculations of a 10-year ahead, 5-year ahead, all the stories, nothing was in the paper or something, all stories. So it's always a regret management, right? Something is arising and you are just, that stock is provoking you to buy, but you don't have your own intellectual capital and understanding to think and understand that process. So that was a great.
And I'll tell you, from 2008, if you see today, there are 90% stocks which are not live today. People talk about Bajaj Finances, HDFC banks and etc. People forget the stories about Reliance Infrastructure. People forget story about Lanco Infra, Patel Engineering, Unitex of the world, which were celebrated at that time.
I still remember, we used to go to the broker's room, right? because that was the technology was not that much,
Yeah.
and everybody this you have reminded me of this Patel, the next in LT.
This next Punjloid
was
the next LT of
next
world.
LT. There's a lot of stories. I mean, IBRC. So all the infrastructure companies was just amazing, unbelievable, destroyed the wealth of unbelievable things. So next question now comes is a very, very, everybody talks about your triple B process. So what actually, how you defined, how you made this process? Because I know this is going to be very long topic, but if you can describe in a just very short, this triple P thing, right?
So I'll tell you, everything is connected. So I'll tell you the real part of it. So when I entered the market, everybody told me that technical chalta hai. Then somebody told that fundamental is only the way to go. And somebody told that no, this doesn't work. You have to talk on to only the management and khabar chalta hai. We thought, we are Gujaratis, we thought that why not to combine all the three things together. So I was giving this lecture in a MBA college, Nirma, and I just thought that why not I make a process out of it. We were talking with students. So I thought price is the first thing which comes in the market, that is, so technicals are what? It's price, right? Second is profits, understanding the business, the balance sheets, the triple B of business. So after triple P, we say triple B. B is book, brand and business model. So what are the business, how the management, how the stuffs, etc., etc. And then the last is people, talking with the management, talking with the distributors, talking with the employees of the company.
That's a quality of the management.
Yeah, quality of the management. And then after all three combination, if everything is tick mark onto the right juncture, then you buy the company, because in this three, your odds are very low that you will go wrong.
But one of the questions in between I have, when you make this process of everybody, whatever you make process, sometimes all that parameters cannot be taken, right?
Yeah.
Then how?
Then you don't buy.
I mean, this is so hard. I mean,
Yeah.
obviously, if there is let's say we are mixing 6 or 7 parameters, triple P and triple B, all the parameters might not get.
So certain times, see.
So you wait for then right patience.
You wait for them. So, but then we have to also understand when you assess a company called TCS, and when you assess a company which is smaller company of 1,000 crore. Now both of the company assessments are different. So you can't expect a TCS corporate governance in a 1,000 crore company corporate governance. They are going to be different. But you have to understand that at least certain parameters has to be same. You can't have any, it is non-negotiable. That for example, a stock, if it is doing losses, can you take it in your portfolio or not? No. If the stock management has a problem, can you take it in portfolio? No. Because eventually, after hindsight, you will get a kick that, oh my God. I'll give you an example if you allow on that. We bought a company called Adani Ports.
Right.
In all juncture, it was right. But in corporate governance, we got carried away.
Yeah.
We thought that, okay, fine, the things are going to be fine. Let us go forward for it. I'm not any day saying that, the corporate governance is not right, but it was not right in our parameters. Right. Eventually, what happened was that there was certain news which came before 6 months, if you remember, in whole Adani group. The first thing we did was that we wanted to exit out, because we understood that we did a mistake out of it. So eventually, you will learn out of your own mistakes. But then, as it is said, what is insanity? Is doing the same thing and expecting different results. So market will allow you to do one mistake and will not take a tuition fees out of it. But you do the second mistake, the same mistake again, then it will take a tuition fee out of it, and that's very, very costly. Believe me, I've done a lot, so I can tell you out of it.
It's a very, very hard, control the emotions and other things. Now, apart from this, if I can ask you about your discipline thing, right? Because these things you cannot control, this, provoke and everything. Like parameters are actually defined. If nothing is we will wait for the right time. So how you discipline, like what time you wake up and like what time you sleep? Can you just describe a little bit about this?
I am, after COVID or post-COVID, my life has been changed, because everybody's life has changed. But I generally try that, I recently read that who is better, the one who wakes up early or one who sleeps late. So I understood the one who wakes up by 5 or one who sleeps by 5. Both people are great.
Are you telling me you are now sleeping at 5 o'clock?
No, I'm not sleeping at 5 o'clock.
Right.
I've understood either you're a night owl, nothing bad into it, but then you that is your own zone. So generally, I like to wake up by early because I find that that's how your Indian Ayurveda or whatever Ayurveda we have created says that you need to wake up by Brahma Muhurat, which is 1 or 2 hours early to your sunrise. Then you do your activity, meditation, exercise, etc., and then you focus on your work. Get back home 6:30, have your food, and then enjoy with your friends, family, or whatever you can do. Eventually, what the world has now taught us that if you do the same process, you are a boring person. Believe me, you are not a boring person. You are a more healthy person. And in investing, the most important part is that your family has. You should be very peaceful in your own head. You should be very healthy by your body and by your mind. Then only you can take right decision. Baki, then what will happen is that if you have not slept right, if you have not done the right things, the whole thing will react into your trading and investing in the current time. I'll give you an example. I have a client who is a pilot, senior pilot, and they say that if they have not slept for a particular hours, they are not allowed to fly. Why? Because their mind has to be right. So same thing is in investing also. So everything it depends on what you are cultured of. Like for example, we have been cultured in the Jain family, so we generally don't like non-vegetarian or nothing like that. So it all depends on your culture and your upbringing. But I think so without discipline. So I'll tell you about discipline. It is written in my book also. Discipline and attitude is the only two words where if you do the total, like A is 1, because A is the first word of ABCD.
Right.
D is the fourth word of ABCD.
Right.
So if you do the math of D4,
Yeah.
I, which is whatever the word it is, and if you total out, it is 100. Discipline and attitude, there are only two words which the total out is 100. So there is no fun into it, but there is a logic into it. So there is no option to be undisciplined in business.
Wow, I need to calculate this because
Yeah.
this is a very, very discipline plus attitude.
No, it's not discipline. Discipline and attitude, both words.
both.
If you have individual
Combining
marks,
the marks.
it is 100.
100.
It is 100.
Wow, one of the finest lessons I have learned in this interview, I can tell you, because okay, I was coming to this book. I have read your book. There was one line, if I remember, taking a cold bath in the morning.
Yeah.
So what was that actually? How it helps in a discipline or controlling emotions or something, right?
So generally, warm cold bath is it again comes from the Ved of India, where Ayurveda is made. Is that if you have cold bath, then the first thing you do is being uncomfortable.
Yeah.
Generally, warm baths are comfortable. You like to be there because when you have cold water, it makes you uncomfortable. And if you do comfortable things, you be uncomfortable in your normal life. But if you do uncomfortable things, you be comfortable in your normal life. So yeah, so the thing is that of course there is a mat to do it. The process, you can't have the direct cold water directly on your head. It should be from your toes to then your body. So in investing, it is same that uncomfortable thing is exiting out of the business. The stocks which are doing good, pyramiding the stocks right, having the right fund managers. These are all uncomfortable things.
Right.
But when you start doing this, you get comfortable in your wealth creation journey.
This is so much wisdom, I can tell you. It's once, because it's always, we don't ask for the stocks, but thought process and the journey. And we have covered quite a bit about Rohan, from about life, discipline, even a triple P stock process. So now obviously for viewers, obviously one of the very questions they want to ask, like what sectors, and if I can ask a little bit about the stock examples, what kind of stocks or sectors you're looking in this coming years?
So first of all, we are sector agnostic. So we generally don't see sector. Okay. So we generally we have a bottom-up approach where we see the businesses. I'll tell you, rather more than a sector, I'll tell you a theory which we are very, very strongly, we believe into it, is that there are two type of right now stocks in India or in anywhere in the world rather. The value is over here and the price is over here. So the price is higher than the value. All the stocks which has done very good, this type of stocks, when the market will be a bit bad, like this, what we are seeing in the wartime, price will come to inch value. So we are seeing there are steep correction in certain stocks very badly. because their valuations has been so high that the business is not bad, but it will come to see its own price. So discovery will happen. And there are second stock where the value is much higher than the stock. And this will happen that when the market will drop, the price will drop a bit. But when the market will rise, the stock will come to see its value. I'll tell you one of the sector which I see that value is proportionately very high to its stocks, to the business is PSUs. I believe
that's a very unfriendly.
Yeah.
I mean, not in a frenzy zone.
So that is where your turnaround story
You can
happens.
get it's not a sexy kind of a business, right?
So that is the value, because value is not been seen by people. That is the reason it's not been sexy. So I'll give you in our portfolio. So whatever the stocks I'm talking, we have in our own funds. I have my own investments. And if you want to invest, please talk to your financial advisor before doing that. I'll tell you a story of GNFC. GNFC has been into fertilizer, being leader into TDI. You won't believe the market cap of GNFC is 7,500, 8,000 crores. And the sales of GNFC is 8,000 crores. And this company is from last 40 years, 50 years into the business, exceptionally into the work. Only the reason they have not got the value is because of the government thing, what has happened, and the things were not changing out. Now, if you see the profitability which they are making of TTM profit is somewhere around 1,370 crores.
Wow.
Now, look at the value of the company, what you are getting. Now, the same time when I see this shows for Shark Tanks and stuffs, company is not making 10 crores of sales and they are quoting a profit of 100 crores of, and I'm saying that who is more mad, is them or me buying value
Rohan,
company?
I always because in India, because this is also my experience, it takes a lot of time to sometimes discover these things.
Yeah,
I mean, sometimes you have to wait a lot of time, even if you see the value and everything, fundamental, everything goes down. It gives obviously surety about like 3-4 years, but it gives sometimes a very lot of, then how you manage that time, the thing where everybody is performing and everything, and your stocks might take a time, because these are not fancy kind of a stocks where certain things can happen very fast. Yes, numbers are very good and it's a value kind of a buying and everything, but how you manage that time, the thing, what kind of that keep you conviction, that keeps you like say your conviction is very high on that part.
So you are very right. So I'll tell you one example is Hindalco. We were seeing Hindalco from last 3 years.
Yeah.
3 years,
Yesterday
4
it touched
years.
all-time high. Yeah,
right?
all-time high.
Nothing
600.
happened into the stock.
Yeah.
We were waiting for when the company. So what we do again is the theory. Triple P, the first is price is when the stock has to hit all-time high. So when a stock hits all-time high, there is something which is positive happening in the company.
So it's the
first
the
indication.
first thing you said, that uncomfortable, when you were talking about the example of cold shower, you were saying uncomfortable things. So people always look for a buy something at a 52-week low.
True.
And you are buying always something which is a 10-year breakout, which is a 15-year breakout. It's on the high part,
Yeah, high
and
part.
you have so much conviction that it will make a new high in the coming years. So that is the one thing I want to say, that the uncomfortable things we need to say. Everybody can do the comfortable things, but uncomfortable we need to learn what is the uncomfortable. But before you do uncomfortable thing, you need to go under the process, understand the complete thing about this thing. So yeah, talking about Hindalco.
So second thing what happened was that company posted exceptional profits. Right, the same time the things were happening. And the third thing was what we understood was, see, in people you don't have to see much into a Hindalco as a company. It's 40% market share of aluminium production, 50% market share of copper production and manufacturing, and then it's an Aditya Birla company. So general things you don't have to see. The only thing you have to see is that what is happening. So EV was happening all around. People talk about batteries, but how you're going to make an EV without aluminium. So that is one of the biggest thing. And aluminium price for 15 years did nothing. And aluminium was soaring high. So it was very simple that aluminium, copper are going to do good. Companies hitting all-time high. The profitability is superior. The demand is going to be exceptional. There's no thought of buying it. So when we added, it was at 330, 340 rupees in our portfolio. And today, I think so it's 80-90% plus. Now, the math over here is when we added, the market was at all-time high. Today, the market is 20% down and the stock is at all-time high. This is the value you are going to create in stocks if you buy a value-created stocks. So this is one of the story of Hindalco. But you have to wait. You have to wait. As there is a movie, which is an amazing movie called Sully. And there is a dialogue is that the best thing comes to the person who waits.
And there is always a one quote is money is always transferred from the active to the
Active
passive.
to the passive. True.
Now, lot of stocks and new stocks where the market share is very very high. For example, the Paytm is there. This Zomato is there. Nika is there. Where you're also liking businesses, but the valuation are so. I mean, the unbelievable. I can understand they come in the next few years, but these business, how you value these things, because everything cannot be bad and everything cannot be good.
True.
Already they're corrected, but obviously one of the best things they have is the unbelievable market share.
True.
Which really have they created a brand in themselves. Though obviously they will not be going out, but making a profit out of this through investment. What I want to ask is like, obviously this triple P thing, lot of things might not this fit, but you like the business, right? Then how you rate these exceptional stories where the valuation is extremely high, but you like the business? Then how you get into these things?
So true. So it is very tough. Honestly, when all this spree came of Zomato and Paytm and people were exceptionally bullish, there were a lot of investors who told that why you don't invest into these companies. But the only thing which we understood was that one is that there is not, the price is much higher than the value. And believe me, there is no doubt these companies are great. No doubt. Paytms are like, I use Paytm on and off the highest.
I
Right?
Zomato, my daughter.
Means everybody.
Everybody.
So kids knows now that if you can deliver the food. My daughter yesterday told me that why you are going to a restaurant by traveling so much, why you can't do a Zomato at the hotel.
They have added extra budget to our home.
Yeah, and then if you see Nykaa, just taking an example, my wife is one of the biggest lover of Nykaa as a product. But what happens is that you are a lover of the business. That doesn't mean that you are a lover of that stock. For example, I have a Maruti. That doesn't mean I need to have a Maruti as a stock in my portfolio. Because I drive a Maruti because of different reason, but Maruti valuation is because of a different reason. So I don't buy this idea of buying the stock, the product you use.
But is it not a contradictory to the thing? Because I always think something you like, right? Something which I am liking. I always want to have that thing in my portfolio because I'm very comfortable. My conviction, my alignment is there. My liking is there. But you are saying you are liking something, but that should not be part of a portfolio.
That it is not necessary that it should be part of it.
Right.
Like there are certain things which I like, and also I have it in my portfolio.
So you have to consider a valuation also.
Valuation is very important part. Like for example, if I would have bought Nykaa today, if I see only things, I would have lost 50% of the value shopping budget of my wife because the stock is 50% down.
Okay.
But only thing what we have to understand is that is the value matching my parameters.
So I was studying this Nykaa. There might be point where the valuation and everything you see in the future projections, then you obviously looking
of
for
course.
that
So
business.
we never have never.
Okay.
So I will never say I'll never buy this. Let it come to the point where my process has been set. I'll give you an amazing example is that Warren Buffett bought Apple at $900 billion of market cap, right? When it was $900 billion. When actually it went from an IT company to a consumer company. So Apple is now a consumer. Of course, it's an IT company, but now it's a consumer company, right? The phone which we have been recorded is an iPhone, right? I'm just seeing across. So he understood, he always thought that I'll never buy an IT company, I'll always buy a consumer company. He bought it at $900 billion when the company was roughly 30 years old. But when he bought it, he gave everything to that company. So now I think it's the second highest value of what he's holding in his own portfolio with roughly $150 billion of investments. So when Nykaa, when it comes, or a Paytm, when it comes to the right value, let's go forward for it. And second thing is that as a fund manager, I don't invest 1% or half a percent of my portfolio. I'll invest 5% to 10% in an individual stock. Can I get that conviction right now? No is answer for that today. Tomorrow, if it does amazing with great profitability, superior numbers and a great value, maybe it could be in the portfolio.
About the stocks and everything we were discussing, sector stocks, and buy price is something which everybody can buy, right? And the one thing I always, not me, I think even the fund managers or anybody, is the most difficult thing is the exit. True. Because you don't want to exit early, you don't want to exit late. So exit point, some people say just hold it, but you have a very very defined exit point and you keep on improving that parameter. I'm just we were discussing and you are coming with a one website also where you're talking about only the exit process. That gonna be amazing. I mean, for any person, not as a fund manager, as an individual, if you can come up with something like that, that will be new. I mean, kind of a thing. I have never seen kind of a website. So what is the exit process like? You just keep in a brief or something. Yeah.
So I'll tell you the things why exit is so important for us is that for the time when we have started the journey, we have seen bad times more than good times. So we have seen stock to go to zero or maybe near to gravity, and that is the reason we have understood that if your exits are clear, your thought process are clear to scale up, to add up, and not. So exit is not only in bad times. People only think that no, exit is only into downside. What happens most of the time, people do mistake is that they have bought a good stock, it rises up, and they are feared that okay fine, let me book it and the profit will go up, but your exit prices are over here, you will hold on that stock also. It's also a very positive thing to hold on a good stock also. So for us the exit theory is very crystal clear. Is three process. Is one is that first of all we decide exit before we enter a stock, that what if it goes wrong, we will exit that stock. Second is that if there is any change into the management or to the business or to the corporate governance, we don't want to be the part of that surprising journey that in overnight the stock can collapse to maybe whatever value. And the third is that if the stock is not performing to Nifty 500, outperforming to Nifty 500, that is our benchmark, and for a consistent 2-3 quarters, then we will see that how we can replace that A stock to a B stock, because we want performers. So Rashmit, my simple point is that we think 15 stocks are like my cricket team. All 15 stock has to perform, has to be fit. If they are not injured, if they are injured and cannot perform, then my simple point is that I replace to A to B.
So obviously no emotions.
Emotions.
Any organization, even the people, if they fit into that category, they are in.
Yes.
Otherwise, it's an exit.
It's simple.
It's a very obviously saying a no and everything. Exit is the most difficult thing. But I'm learning.
Yeah, I'll tell you. I think so. We are all big Sachin Tendulkar fan, right? Like I'm big Sachin Tendulkar fan. Can Sachin Tendulkar play right now in our Indian cricket team? Answer 90% would be no, right? Because maybe his age and stuff like that.
Right.
But today maybe I would not like an A player right now he's playing, but he's fit and he's doing very well. I have to keep my emotion aside. Right. Because for me, portfolio is more important than my central ego or central liking and not liking.
Yeah, absolutely. I mean, the cricket team and one is very much connected. This thing, even I have read one of the books. The cricket and investment process or thought process is very simple. Okay, so I think now the most everybody wants to ask one of the finest. What is after this Ukraine Russia? You said I don't watch news. I have to make a sense from a noise. So everybody is affecting their folio. They want to shift whether would do or yes or no. Even the good folio is somebody is exiting or something. But how you are managing your emotions in this, what are Ukraine and Russia, and what you think right now, and what is coming ahead?
Yeah, so this is a question I wish I will put it in brief. First of all, I honestly, you won't believe, I have not seen a single video of what has happened. Not switch on a TV and to see what Putin is talking or what Ukraine is talking, because I eventually feel it is not connected to me. A. B is that always when there is a war type of a thing and our country is not being affected much, it's a great opportunity. And I am so profound and proud to live and been born and been called as an Indian. Today, India is working so hard for all the people who have stayed there. That is what I know from the crowd which is happening, because my wife is a big buff on the news side and everything. So she keeps on telling what are the things happening here, there. So that's okay with me. But for me, it is simple that when the things are out of my control, I'll switch off the screen and switch off the things. I'll just look at the stocks, what is happening right now. And that is easy. But I'll tell you, every bad time gives you a great opportunity to invest in good things. So I'm just seeing that what are the things which are happening, which are the companies which will be benefited out of crude. Why I take a point that, crude has gone $110, the world is so problem. Let us take it as an opportunity that which company will be benefited out of it. Aluminiums and stuff has rose so much. Which are the companies will get benefit out of it? Which are the company which has dropped the least? Why they have dropped the least? And which are the company which has dropped the highest? highest. So I was recently watching, somebody tweeted today, in Nifty 500, top 20 stocks which did all-time 52-week low.
In Nifty 500.
In Nifty 500, which are the top
Right,
20.
right.
I was just seeing how many stocks are there of mine. Believe me, none was there. And there I think so, okay, fine. This is my sanity, because these are the companies which is not, my companies have not gone 52-week high. You won't believe, in my two portfolios, there are 7 stocks are near to all-time high in this time. So if it is like that, then I eventually understand that you only have to see the risk.
I think that's why you're having a sleepless night.
With sleep lights.
One of thing I can tell you with my experience, the people who have changed in this financial field, who have made a huge wealth, everybody has made when the opportunity arises. They sit with the paper and pen, they make your own assessments, because these corrections provide you an excellent opportunity.
True.
To get into something which you always wanted, right? So I think these war crisis, obviously one day everything gonna be over, right? Even the COVID has gone. Even these things will come and go. But we need to understand we can make one of the best decisions in these difficult times.
I'll add that as an investor point of view, timing the market is one of the most lousy decisions somebody can do. Nobody, believe me, can time the market. The only thing only 2 people can make money in markets. One, either who believes in luck. Bought a share, I'll forget it. If I will make money, like my father did, bought an Aarti Organics, which eventually turned to Aarti Industry. He forgot he got 1,000 rupees of share in 1992, turned out to now 80 lakh rupees. It was sheer luck. It was no maths, right? He didn't knew, so that was the reason he stayed into. And second is logics. Only 2L can make money. Anybody between this area are going to be crucified in the market.
I think we had a just amazing interview. Wisdom, you can talk about this discipline, discipline plus attitude equal to 100, regret management, making sense from the noise, Ukraine crisis, and sectors we have talked. So if I have the liberty to ask you, because you have talked about one sector, this is a PSU. Now I can, obviously, before this is a disclaimer, this is not a recommendation. This is just, you can consult your financial advisor. But one of the stocks in a PSU where you are very bullish, and if you just can highlight how you see a value in that.
So I can't name one, but I can name because one would be too specific. So recent addition would be companies like SBI, where a huge value is there into the banking side. 15 years stock has not done anything. 2010 the profit was somewhere around 2,000 crores or 5,000 crores in that era. Today is more than 35,000 crores of profitability. The whole value is superior. Second is power grid. Power grid, we are all talking for EVs, but who will provide the power? And if you see, power grid has been superior dividend giver. In 2007 the price was somewhere around 150. Today is 100-200 rupees. The profitability has gone 10x and amazing. So in this time also it's near to all time. This is the power of the stock. And lastly GNFC, and of course companies like Hindalco is making a huge difference to its value. So rather naming the company, because company will change eventually. We may exit this company after 6 months, 1 year, 6 years. I can't assure you. There is no tag that I will buy this company and not sell it forever. Right. This is one of the most stupid thing people say around. No, that doesn't work around. Only thing you have to see is that is the value higher than the price. If the value is higher than the price, stock is hitting all time, profitability is consistent and it's all time high, and the company's products are superior, I think so nobody can stop you from wealth creation. Nobody in world can stop you from wealth creation.
I think you have summed up very well today with the long-term wealth creation is the mantra. You have talked about this meditation, discipline, yoga along with this thought process. So just want to say thanks finally. One of the lessons you want to give to one of the individuals, like how he sees as an investment as a journey, not as a destination. So any one final thought you want to give to our investors?
It's a tough thing to tell one, but I think so it's all about what you love. If you think Saturday Sundays if you're going to take equity investments or any investing is because it's a weekend and it is easy, it's not right. It is tough. It is the journey between you versus you, but believe me, it is one of the most amazing journey. there is no profession in the world who can give you so much sanity than this one. And don't take it just for creating money. Enjoy the process, enjoy the stuff. There will be mistakes around. Keep a mistake book, write it that okay fine, this is the stupid mistake I did. I booked the profit, I exited, I heard for my friend, etc., etc., and read it over. And it's a journey and you will enjoy it. And this is the only profession till 100, wherever you live, you can make money, you can have it. And when you have your grandkids, you have story to tell, right? Tell that how you created a blunder, which are the stocks you bought, and how you created wealth creation process. So for me individually, equity investments or stock markets or is a wealth creation story. I want people to tell that okay fine, I bought a jet plane because I had invested with this guy and he created superior wealth for me, or my kid's marriage in destination marriage happened because of I invested with him. I think so it's the journey what you enjoy, and believe me, it's not for 2 years, 3 years, 5 years, 10 years, it is forever. So it's as it said that diamond is forever. Actually diamonds are forever, but stock markets are forever. So take it like that, and that's how you will enjoy the journey.
Wow, wow. Very good final thoughts. So, talking about you on Saturday, Sunday, if you can note down your mistakes of a week, and that will obviously improve your investment thought process even in a life. I think that goes in a life as well. So, thanks, Rohan, for a wonderful interactive session. Hopefully, everybody liked the show, and this is our first of its kind we have done at Green Hedge Capital, and hopefully, we'll add more value to you. Also, I want to thank Mandeep Kautangra for this beautiful setup. And I want to thank this Taj property for allowing us to conduct a session over here. And thanks to my GHC team for making all the efforts. So, signing off, Rasmeet Sethi from Green Hedge Capital. Thank you.